Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Christian Karcher.
And we're here to provide you with some financial advice in a language you can understand. Well, this starts the month of April. And April is what month?
It's business? Financial Literacy Month.
Yeah, and so we're going to try to provide you with some financial advice in a language you can understand that falls under this issue of financial literacy, because not enough people are financially literate, are they?
Absolutely. And that starts with even the smallest things, but that's what we're here for, to give some education and provide that financial advice and financial literacy in a language you can understand.
Absolutely. And you know, look, I don't care whether you make $1 million or $6 an hour. There's one thing that we all have to do. And what's that, Christian?
Pay taxes.
We do have to pay taxes.
Or at least file taxes.
Yeah. And well, you know, we have taxes withheld. And I think taxes is one of those things that is totally misunderstood. And we learn more about that as we have relationships with our own clients, and we start to analyze their tax return as part of our financial planning process. And the eye-opening experience many of them have when they think they're paying this much or that percentage in taxes is far different from what it really is.
Yeah, absolutely. People don't quite understand what the different tax brackets mean, what their real effective tax is. And then also, you know, a lot of people say, oh, I owed a bunch in taxes, or I didn't have to owe very much, or I got a big refund. The number that you get from your accountant or from TurboTax in April that says this is how much you're getting back or this is how much you have to pay is not your total tax number. The total tax number is how much you've paid in over the course of the year and how much you have to pay. That refund or that payment is just the last step of the tax plan.
Yeah, and so when the accountant says to you, you owe X numbers of dollars, or you're going to get a refund of X number of dollars, it's not that your accountant did a good job or a bad job. It's just a check and balance system to just make sure that you pay the right amount of tax based upon the income that was reported to the IRS.
Right. So essentially all year you're making guesses at, okay, what is my tax going to be? When you're employed, it's a little bit easier because they kind of do it for you and you kind of let that go and see how it goes. When you're in retirement, you're picking a number. How much are you having withheld from your Social Security? How much are you having withheld from any distributions from your retirement accounts? And you're kind of just making guesses throughout the year, and then you get to tax time and you know, the accountant or the tax planning software figures out how close were you on all those guesses.
Yeah, and the thing is, in reality, the way we look at it, it shouldn't have to be a guess. But if your only source of income is your employment income, your employer might choose, based upon your salary, your hourly wage, whatever it is, to withhold a certain amount from your pay. Or you may elect to do that. But there's adjustments you can make as well, because what people don't realize is that interest that you get on your CD or your money market, or dividends you might collect, or trades you might do in your Robinhood or any type of brokerage account could be taxable to you, yet in all of those instances, taxes aren't withheld. So you need to accommodate for that some way, shape, or form, right?
Yeah, and the other thing you also have to do is, you know, your employer doesn't know about your personal and home life.
Of course.
If you are itemizing your deductions because you have a large mortgage, or you're getting child tax credits because you have young kids, that's not accounted for in their kind of basic, okay, this is how much you make, this is how much we withhold.
And that's not their responsibility. It's your responsibility. You're having your taxes withheld. And so oftentimes people will look at what their gross income is, their salary. You're making, let's say, $100,000, and you must, and many people will come to us, they say, well, I make $100,000, so I must be in the, and I'm going to use this as an example, the $28,000, the 28% tax bracket, which means I must owe 28% in taxes of my $100,000. And oftentimes that's not right at all, is it, Christian?
No, because, you know, we have a graduated tax system in the U.S., which means the first X amount of dollars gets taxed at 0%. I think that's about
Well, under $12,000. Well, depends upon whether you're married or single or whatever.
I won't use numbers, but the first little bit is taxed at a lower rate, and then it's taxed at a slightly higher rate, 10, 12, 22, 24%. But it's gradual. And so if you're at $100,000, instead of being at the 24% tax bracket, most of your income is probably taxed at 22 or 12%.
Right. Well, we'll get this. And I mean, we've got here's the numbers right here for 2025, because 2024 is over. Let's say your household income was $100,000 for the year. Maybe it's $100,000. Did you know that for the first, from $0 to $23,000, you're at the 10% tax rate? The next, from $23,000 to $96,000. Remember I said you made $100,000? From $23,000 to $96,000, you're at the 12% tax rate. And guess what? If you made $100,000, that's probably not your full tax liability, because you have deductions that went against that. Because there's a difference between what you show as income, what you see, your salary, your interest, your dividends, capital gains, Social Security, etc. You might add all of those things up, but not all of that number is what the tax liability is going to be laced against. We got deductions, right?
Absolutely. And so you have to think about it holistically. And for a lot of our clients, as they're as they're being employed and they're having taxes withheld, they usually get to a number, they adjust their withholding a little bit, and they get to a number that's pretty spot on year after year. And then retirement comes. And they stop getting the paycheck from the employer, and instead they're maybe collecting Social Security, maybe a small pension, they're taking distributions from their retirement accounts. And that first year, they're surprised. And people say, oh, I'm paying so much more in taxes each year. And this goes back to our first point, which is the number that you have to pay at the end of the year is not necessarily the number. So Mark, do people pay more in taxes in retirement usually?
Well, sometimes, but there's always the answer is it depends, but it's a different set of taxes. Think about your employment. Take a look at your paycheck. Pull it out right now if you get one. What withholdings do you have that are on your pay stub? Sure, you've got federal tax. If you live in a state where there's a state tax, you might have that. You have, perhaps you put money into your 401k plan. Perhaps you pay FICA tax, which is both that Social Security tax and Medicare tax. Perhaps you have deductions for insurance or health benefits or all of those things. And you just look at, my gross amount of money that I made was, let's say, $1,000 for the week, and I brought home a check for $600. Do I pay 40% in taxes? Well, no, because some of it went to taxes, some of it went to 401k and other things. But now, let's say now you have $1,000 that you're taking, as income in retirement for that week. Would you have the same taxes withheld?
Well, and the answer is no, because
Not at all.
distributions on those IRAs are not subject to FICA taxes anymore.
Right.
If you're collecting Social Security at the same time, Social Security also no FICA taxes. And on top of that, in most cases, only 85% or less of your Social Security is even taxable to you. So that impacts it. And
you don't pay into the Medicare system. You're not having any money deducted for 401k because you're not working anymore. Health insurance might actually be, if you're in retirement, part of that Medicare payment might actually be deducted from your Social Security check before you even get it. And so the tax rate in retirement is, I don't want to say whether it's lower or higher, it's different though.
Yeah, absolutely. And what we often run into is when you file for Social Security, it's not made really explicitly clear, okay, here's how you can withhold federal taxes. And so we often run into people who are having nothing withheld for taxes from the Social Security, and then to make up for that, they have to withhold maybe 20% on their distributions from their retirement accounts.
Yeah.
And so to them, they think, oh, I'm paying 20% in taxes. Well, that's because you're making up for the other income you have where you're not doing any withholding anymore.
Yeah, it's interesting. Many people don't realize that taxes aren't withheld from Social Security. Now, you can request the taxes be withheld from your Social Security check. Most people don't for some reason or another. But like you said, they make it up through the tax withholdings that they might take from their retirement accounts. But remember this, If you don't have much in the way of a retirement account from where you take money from, but instead maybe you have money in a bank account, or maybe you have a personal investment account and you take distributions from there, there's not as easy of a way to have taxes withheld and sent to the federal or state government, or the IRS, if you will, as there is with a retirement account. That responsibility falls to you. And that might be a reason why your accountant could suggest you pay estimated taxes. You just have to find the balance. So one of the things the reason that we're sharing this with you is, first of all, it certainly falls into the category of financial literacy that everybody needs to know. But one of the things that we do as financial advisors, Christian, is really embrace that tax planning concept. And we have tools to help our clients make informed decisions.
Absolutely. Where you're drawing money from, everywhere you draw money from in retirement has a tax consequence. What is that tax consequence? How does it impact not only your taxes, but the payments that you have to pay on Medicare? There's this thing called IRMA, which increases how much you have to pay for your Medicare premiums depending on where your income is. All of these factors we want to include not only in the tax plan, but in your overall financial plan to say, where are you drawing money from in retirement?
Yeah, because it's something that we can illustrate, because as people approach retirement, oftentimes people have the question of, where is the best place to draw money from to support my income need? And those places from which you draw income, let's say you retire at 60 or 65 or 70, during different periods of time in your life, it may make more sense to draw money from one place rather than the other, to manage all of the other implications of taxes around that.
Absolutely. And then throw another wrench into the pot is, okay, now how might that change in the future? How do we make the most of our current tax environment with also understanding that these things change? New administrations come in, they change the rules on the taxes. So what can we do today to make the most of the rules as they are written today?
And one of the things that we do is we make our decisions based upon the rules as they are today, right? I mean, we will have, look, you've heard all sorts of speculative thoughts about perhaps Social Security will be tax-free. Perhaps tips will become tax-free. They're not right now, by the way. They were a campaign promise, but nothing's in force yet. Look, tax rates could go up. They could go down. Excise tax, Medicare tax, all of those things could change. But we are not going to adjust your withholdings and your planning for this year on speculative expectations or hopes of what could happen in the future.
Absolutely.
We just simply can't. And frankly, that's what we call financial advice in a language you can understand. So if now's the time for you to get serious about your financial planning or investment management needs, perhaps we're the firm for you. Give us a call, 978-531-8108. That's 978-531-8108. If you want to learn more about our firm, find out about who we serve, the types of clients we have, the work that we do, the fees that we charge, or perhaps you just want to sign up for our free weekly newsletter that comes out every Friday at 10:30. All you need to do is go to our website, freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. Go to the bottom of any page, put in your name, your email address, and you will receive our free weekly newsletter. That's what we call financial advice in a language you can understand. Have a great day, everybody. We'll see you later.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.